This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Welcome back to the Research Talks podcast here on Stockbox with Alan Green on what is looking like a sunny Friday compared to last weekend, the bank holiday weekend, where I think we both had a bit of some snow flurries, didn't we, Alan?
We had snow flurries. We had, actually, Friday was probably the best day weather-wise. It was still cold, but it was warmer. But these Arctic conditions over Easter and snow flurries are most unusual. But it's weird because it seems to dampen down any enthusiasm for the markets. It went very quiet over the weekend, we were saying earlier, of course, it's only just starting to pick up this week. But certainly it's commensurate with the weather too, no doubt. Because certainly looking outside, I mean, it's a nice sunny morning, and it's warm too. You know, it's been freezing this week down here on the south coast. It would be nice to think that we've got a warm weekend in store.
Would be nice to think that, yes. And the markets were very, very odd earlier. It's like people were still hibernating after that weekend, or the markets were. But it does seem to have picked up a little bit more sort of yesterday and today. So yeah, hopefully we can have a good sort of run up to into May before we sort of hit the summer months. But so today we're talking about feeding the world, aren't we? With Emmerson and of course potash.
Yes, indeed.
And then of course as well we've got Mosman oil and gas. So which one would you like to take first, Alan?
Well, let's start with Emmerson, Mark. You know, this is a great little company. In fact, we met with Hayden Locke a couple of years ago and had a chat and just got to know a bit about the project. And of course, the background to potash, for anyone that knows, is the challenge to make arable land as productive as possible. There are many different applications for potash, and what we find is now that if the projects are of decent quality, you'll get the big players getting in there. You know, the fertilizer manufacturers and the big players getting in there and arranging offtake agreements as early as possible. And right back at the start, when in 2018, when Emmerson RTO'd, it raised $6 million at 3p. An offtake agreement was agreed shortly after that, pushed the shares up to 4p. So that's already in place, which is obviously a very good sign. But the fact is that arable land, as we know, is shrinking. So given that I think the data points to a requirement for 60% more food needed by 2050. And of course, there's also the fact that so many meat substitutes are now being grown artificially. There's an even greater push for different sorts of food across the Western world, and we're now seeing this focus on making arable land as productive as possible. Productivity per acre must increase, and of course, various potash products are used to fertilize the ground to increase crop productivity. One of the biggest issues is that most of the supply locations for potash are remotely located. So, of course, you've got some in the middle of Canada, and you've got some in Australia with Salt Lake Potash and others. Emmerson's asset is the Chemiset potash project, and it's not in northern Morocco. So geographically, it's about as central as you can get. The other aspect that is very important to consider is that with the mineral resource estimate in excess of 500 million tons, you've got a 19-year mine life, and the project itself is located just 135 kilometers from the port, so they can get the stuff. They can get the stuff produced easily, get it onto the trucks, and get it shipped to the port, and off it goes. And I think they've Brazil is anticipated to be one of the biggest consumers in the coming years, and it's worth to Chemiset to Emmerson, the company, is worth some $80 a ton delivered and shipped all the way to Brazil, which is quite an impressive figure. So Just on the company itself, Emmerson, of course, as I said, it RTO'd in 2018, currently trading with a market cap of 46 million, and that's at 5.8p. Shares have traded as high as 8.5p on the year and as low as 3p. So we're very much in the mid range. The asset has gone through the various stages that you have to go through: scoping studies and metallurgy tests. But really, a key step forward was taken last year, I guess largely at the expense of Serious Minerals shareholders, in that, of course, the senior director at Serious Minerals, and of course the director of ICL Limited with Jones Cleveland Potash, was appointed as CEO of Emmerson. And that's, for Graham Clark to make that move, a senior figure in the industry, is significant. And I think confirmed what a lot of investors had always believed in the validity and, of course, the quality of the Chemisset asset. There are a number of other factors too, which I think have got investors' attention this year, and that's in relation to the valuation of the company in relation to the net present value of the asset. And Emmerson undertook a survey, or rather, should I say, an independent consultancy called Argus undertook an independent survey of potash. Potash prices are surging at the moment, currently $350 a ton in the USA, and that basically gives Emmerson a net present value estimated at around $1.4 billion US dollars. So that's substantial, and yet here we have Emmerson trading at 49 million, so that's at about 5% compared to its peer group. Salt Lake Potash, of course, in Western Australia, that's valued already at 75% of the asset value, or the net present value of the asset. Others range from American Pacific Barates at 27%, Danakali at 23%, and there's Emmerson right at the bottom at 5%. And yet, arguably, it's got the best asset of the lot, in that, of course, it's in terms of its location geographically, it's better placed to ship to all of the key consumer markets, or better placed to ship to all the key consumer markets than anyone else or any other company in the industry. So the progress of the company this year has been quite substantial, and really in February we saw the company cross another valuation line when the mining license for Chemisset was formally approved, and that gives approval for a 10-year period, and what it means is that construction on the mine can start in in quarter four of 2021. So we have the prospect of the mine under construction within 6 to 8 months. What, of course, this will do is it will have an impact on the region in Morocco. It will increase local GDP per capita by 40%, and will also create 2,300 odd direct and indirect jobs. So it will have a huge impact on the region in that regard. So also in February, the company raised another further 1.7 last year at 4.25p, following, and then of course the feasibility study followed, which pushed the price up higher. We then the company raised 5.5 million in February of this year, at 5.75p, and also announced it was moving from the main listing, which it had been previously, to the AIM market, and of course that has already taken place. So we then come on to the actual company itself. Hayden Locke, as I said, was formerly driving the company forward. He's an non-exec director now on the board. Formerly High Fuel Resources and Papillon Resources, very very highly regarded. We then have the exec director, Robert Rigson, who was the founder and CEO of Moroccan Salts and formerly worked with Extrata, Manhattan Corporation, and Haranga Resources. We also have Ed McDermott, who's well known as an entrepreneurial CEO running Fishing Republic, Fast Forward Innovations, Stellar Resources, and Noricum Gold. And then the outgoing chairman, Mark Connolly, is being replaced by James Kelly, who's just joined as an non-exec director. And of course, James Kelly, we spoke about the other week. He's also on the board at Trident Royalties. And so James has joined as a non-exec director, and of course his background is within the large mining groups. He was a senior director at Extrata prior to the merger with Glencore, and he's taking over as chairman of the group. So you've got a very broad spread of experience on the board there, ready to take this forward. So really, Emmerson, I believe, is nicely poised now to move into the construction phase, and with an offtake agreement already in place, and the route to market already well established, with a really good quality road, 135 kilometers to the port. I think the year ahead is looking very exciting for the group, and I'm sure we're going to see more progress in the coming months. And I would expect to see the price or the valuation of the company rise in relation to the net present value of the asset. It does seem odd that it's so undervalued compared to its peer group.
Yeah, at 5% there, it's just been missed, I guess, by the market so far.
I think it has. I don't think it's had perhaps the exposure that it might have done. But of course,
maybe
of course,
Morocco. I don't know. Maybe people are a bit funny about that. I don't know.
Yeah, but the odd thing is, I mean, Morocco ranks highly on the investment risk index,
Right.
and which means you've got a lot of internationals and majors operating there, so it's a safe, benign environment to operate in. But yeah, it'll get to a stage. I mean, there'll be a tipping point where I think some of the larger institutional investors will suddenly realize, just how undervalued this asset is compared to peer group, and of course it's going to need to raise more money going forward for construction, but there'll be farming agreements, no doubt, and joint ventures, and just as we see, for example, in the Sonora Lithium project, where you see Ganfeng, the largest lithium company in the world, taking a huge stake and providing the funding to take the construction through to completion. I imagine the next steps for Chemoset, although of course we don't know this at all. I imagine the next steps will involve some sort of agreement like that. But certainly at the current 5.7p, there's everything to play for. There's been very little movement in the stock, relatively speaking, and I think we're set for a re-rating in the not too distant future.
And what stage are they at now, Alan? And what's to come in the short term?
Okay, so the mining license has been approved. That was approved in February. So formal approval. You can now go ahead and build the mine. Construction starts Q4 2021.
Right.
We've got James Kelly, who's come in as director, and clearly with his connections and of course as director of Trident Royalties, I think there's a new dimension of opportunity that he brings to the board, and we have a takeoff agreement in place. All of the feasibility studies and metallurgy tests have been completed, and we're now moving to construction phase, which will basically start taking place in Q4 this year.
Yeah, so very advanced then. Looking for construction this year. That is advanced. Yeah.
It's advanced, but that value,
the value is out of whack.
Having jumped all those hurdles, that value is simply not being reflected in the share price at the moment. I mean, this is a huge operation. 500 million tons plus of potash in the ground, and the demand in the market is well established.
Yeah, okay, that's definitely one to keep a close eye on. And I remember the Sirius Minerals sort of excitement being from North Yorkshire originally, and maybe that had that kind of homegrown love kind of thing. Of course, Graham was involved with Sirius, and we did a podcast with Graham, a Market Musings podcast with Graham a few months ago. And we'll dig that out and sort of push it around again, because it's very interesting. He's really started at the coal face, so to speak, and really worked up from being at the coal face, or the potash face, let's say, and worked up to where he is. And yeah, there was a lot of excitement around Sirius, and obviously got taken over there by Anglo in the end. But what Emmerson have got is of higher quality. It's the real McCoy. I think what Sirius had was as we said earlier, the cooking version of potash, still good, but not that kind of premium quality that Emmerson have.
That's the thing, that's you're absolutely correct, Mark. I mean, Sirius had the polyhalite, which is very much the cooking version, but not the quality potash that can be used to produce sulfate of potash, which is the top end of the market stuff, which sells at a premium, and of course it will be highly in demand. But I think you've got to consider all of the entire investment proposition, and for me, just its geographic location, being close to the coast, and literally, you can get the stuff. I imagine if a truck drives out in the morning, it's loaded onto the ship, and the ship could sail in the evening, and you're on your way to market, and the money's in the bank. It's it's that sort of operation, and I think that once retail and institutional investors take a closer look at that, I think they'll see a pretty compelling investment proposition right there. So I think it's a case of get it while you can, really, because I don't think it'll be a 5.7p for very long.
No, I agree there. I agree. Well, thank you very much for that, Alan, for articulating that quite well. So let's move on. Let's talk about the next company today, which is Mosman Oil and Gas.
This is a very interesting company, and again, we've seen a number of small oil producers in the US really start to capture the attention of retail investors. Certainly, the end of last year into 2021, we of course spoke about Echo Energy, and Mosman is another very much in that mold. So Mosman Oil and Gas, MSMN is the EPIC code. The shares are traded as high as 0.28p and as low as just under 0.01p. Currently at 0.15p. And again, the chart shows real consolidation between 0.2 and 0.15p at present. Gives it a market cap of 5.4 million. So there's absolutely no upside there at all. So there are two strings to the Mosman bow, if you like. So we first of all go to East Texas, and of course, anyone that knows Texas will be aware of the big storms there recently, which certainly interrupted oil production in the region. But it's one of it's a very low cost environment to operate in, and here Mosman has interest in a number of wells, and I'll read these out. In the Falcon 1 well, it has a 50% interest in the Champion field. It has a 97% interest in the Cinnabar well, a 60% interest in the Galaxy well. That's also in the Champion field. And then we come to Greater Stanley, where it has approximately 15%, Greater Stanley at 20%, and throughout last year, it sold off some of the other wells and assets it owned. The Welsh assets sold for $420,000, and obviously, put a lot of cash into the company accounts to enable them to progress the other wells in the region. So I'm going to talk about the oil production first of all, and then we'll come on to the Australian asset, which is the Amadeus Basin. So in February this year, the company announced production numbers across the 6 months in the run up to the end of December. The net attributable production across all the wells to Mosman was 9,871 barrels, which gives it a net of about 600,000, or $550 to $600,000 over the period. So the broker for the company has put out a number of estimates and estimates of where it's going to be in terms of production later on this year. SP Angel believed that Mosman is going to grow the production base by 700% this year. It ended last year with net cash of $231,000, and the broker believes it will end this year with net cash of $2.6 million. So that's a substantial jump up. As I said, I'm going to talk about Amadeus in a second, but the Amadeus Asset, the broker believes it could treble the market cap by itself, given the valuation on the ground there. But we then progress with the oil fields. The key asset and one which was performing very well, it was the Falcon 1 asset, and then production issues emerged. It turned out that the well was ingesting water, and of course that affected the production. So the decision was taken to shut that well down, and with the operator, it's Mosman are undertaking a work over the well, and they're going to start drilling higher up. The oil's still there, but they're going to start drilling higher up so they can avoid the water. That's going to cost them about $20,000 to do, and that will be funded from existing cash resources. The company also announced at the start of this month, in fact, earlier on this week, that it was also going to acquire an additional 20% interest in a lease which covers part of the Greater Stanley project, and that's going to cost them $15,000. So that's going to obviously add to the production from the Greater Stanley field going forward, and we are due some numbers and an update on that in the delayed interim results, which are out shortly. So the company is producing cash. It has cash in the bank, and also in March it raised $1.5 million at 15p, which is basically where the price is now. And this was solely to fund the EP145 project in the Amadeus Basin in Australia, which is the other asset owned by Mosman. Drilling work has been undertaken historically in the Amadeus Basin, and the drilling results indicate commercial production of hydrocarbons and also significant amounts of helium. Some 6%, I think, in one of the wells called McGee 1, 60% of the gas asset there is estimated to be helium. And of course, helium has numerous applications in medical, nuclear, and space technologies, and the demand for helium significantly exceeds current production, which has seen the price of helium rise by over 1,000% over the past couple of years. Australia is a leading producer in this regard, so clearly this is something that's going to greatly benefit, and I think could significantly change or materially change the Mosman valuation as it develops. Going back to the point the broker made about the Amadeus asset, the broker believes that the Amadeus asset could treble the Mosman market cap, and the asset unrisked could be worth up to $172 million, which clearly against the $5.5 million the company's currently valued at is well in advance of the current position. In terms of the board, there's a very experienced board running the company. We have Executive Chairman John Barr, formerly from TNG and Thor Mining, was also involved with Sherwin Iron and Aquarius Platinum, and of course we spoke the other last week about Ananda and Melissa Sturgis were also involved with Aquarius too. The technical director, Andy Carroll, is formerly with former BP senior management, also with Australasian Energy and High Peak Royalties. And then we have the geologist, John Young, who's got 25 years experience, worked with Trek Metals formerly, and has contributed to a number of key projects over the years. Mm-hmm. So in summary, I think we can say Mosman is certainly has two key assets. The oil production, you're always going to get problems and hiccups with oil production, but the team are very experienced in this regard, so they've been able to deal with them ongoing, and we're going to get some further updates from the company on oil production going forward, which of course is the lifeblood and the cash flow for the company. But what I think is really fascinating is the Amadeus asset, and if they get to the stage where it's de-risked, where the valuation at the estimate from the broker of $172 million can be proven, it's going to materially change the valuation of the company. And of course, helium, the price of helium is showing no signs of falling any lower. In fact, the demand is going to increase. So this is, I think it gives a very strong backdrop for the company as we progress throughout the year, and we should get some more news on the McGee-1 well in the coming months.
Okay, great. Well, that's fantastic, Alan. Thank you very much for talking to us there. So we've covered Emmerson PLC and Mosman Oil and Gas, and those helium sort of credits as well. That's unusual, but I guess it's a nice little bonus there for Mosman.
Well, it is. Yeah, you've got the cash flow from the wells, and obviously, we heard it acquired the additional 20% in the lease on the at the Greater Stanley project. So that's going to lead to an increase in oil production, a steady increase in oil production. And just as we discussed with Echo Energy last week, we've got these wells, and the cash flow then funds the development of other wells. You can see, they have the resources to deliver exponential earnings growth from these wells in a relatively short space of time, and then that's great. So you've got good cash flow visibility, but then you've got the blue sky potential with the helium asset in Australia. So I like the mix. It's a very solid mix.
Great. Okay. Well, again, thank you very much, Alan, there for coming on to the Research Talks podcast, and we'll catch up again in a week's time.
Thanks, Mark. Catch up next week.
Thank you for listening to this Stockbox interview. For more information, interviews and videos, visit our website at stockboxmedia.com or give us a follow on Twitter by searching @StockboxMedia.